Good morning, good afternoon, and good evening. Welcome back to the It's Attainable Real Estate Investing Show. It is episode number 10. Wow, we have come a long way, haven't we? But we've got a long way to go. I've got a lot to share, you've got a lot to learn, and there's a whole lot of investing to do out there. And today's show is episode number 10, a special episode. So we've got our first guest. We've got DeVon Jackson from PA Commercial Capital. He is a commercial real estate broker, or as you will hear him explain, a commercial real estate agent. Now, I could tell you some of the things that a commercial real estate agent does and how they fit into the real estate investing puzzle, but it's probably better that I don't miss something or understate what he does and let him explain for himself everything that he does as a commercial real estate agent, and more importantly, what he can do for you. I've often heard DeVon Jackson say, and I've seen it written, that he's the entire commercial real estate department or the entire real estate department for his clients. So let's get to it.
Welcome to the It's Attainable Real Estate Investing Show, where you will learn about investing, the power of real estate investing, and how to invest in it. Whether you have the time or even if you don't, you're going to see it's attainable either way. And now your host, who always wants to share knowledge with you, Christopher Balkin.
All right, welcome back to the It's Attainable Real Estate Investing Show. In today's episode or today's show, we've got DeVon Jackson. DeVon Jackson is a commercial real estate broker with PA Commercial Capital, serving the greater Detroit and surrounding areas. DeVon comes from an IT background. We kind of got that in common a little bit. DeVon is also a Morehouse Scholar with additional studies at Rollins of Florida and a member of Kappa Alpha Psi fraternity. Welcome, DeVon.
Thank you, Chris.
All right, thanks for joining us.
Now, is it Chris or Christopher? What should you prefer?
We can go with Chris. Christopher is the official name, but Chris is just fine.
Gotcha. Okay.
Yeah. Good. So DeVon, for the listener, just so you know a little bit of background, I've been talking with the listeners and the viewers about real estate investing, kind of starting those who haven't thought about investing kind of from the beginning, and maybe even some of those who have, but kind of been thinking about what they want to do, but started with the beginning with savings, and then talked about investing in the stock market, and then investing in real estate, and then we just finished a series on buy and hold real estate investing. So you come to the viewers at the perfect time. The idea is that I wanted to educate them on all the different terms and all about real estate, and then that when we have someone on knowledgeable like yourself, then everybody can know exactly what you're talking about. So we'll go ahead and continue on. So tell me, DeVon, I know your story high level, just kind of what we talked about in RIA meetings. That's where I met DeVon at. He and a peer of his host a commercial multifamily, or really a commercial real estate investing RIA meeting twice a month. And it's really good. I say multifamily. We talk about a lot there. We talk about retail, industrial, but I won't steal the thunder. So you tell
good
me.
Group. That group has been very nice. And in fact, it kind of lets you know in a lot of cases where you stand, because you end up answering questions that you've had to address in one way or another yourself.
Yeah, that's true.
Just in terms of background, I finished college in 1970 from Morehouse, a math major. Got into programming pretty early, back when they had cards versus programming online or with devices. Okay. And so I programmed for a few years. Then I joined IBM as a systems engineer, 76-ish or so. Then I went from there into sales with IBM, and I was in Greenville, South Carolina, and I sold with IBM for 5-6 years, and then at that point in time, the IT world was exploding, and there were a lot of opportunities for, salespeople who knew what the heck they were doing to get into work for some of the independent companies. And so I spent the next 20 years after IBM working with other independent software companies, primarily software, primarily application development, primarily user support, those kinds of tools, application platforms going forward. So I had a very rich background in IT.
Wow.
2002, 2000, of course, that changed. Oracle and Microsoft and IBM decided that they were going to control the world and forget about some of these other platforms, and the world got all of a sudden it got dull. So I retired in 2002. Took some 401k money and bought some commercial real estate.
Okay.
Didn't know a doggone thing about it at the time. I was talking to some guys at the gym, and it seemed like a pretty good idea, and I had a little extra cash hanging around from the 401k money, by the way.
Right.
And it seemed like a pretty good idea, and I talked to a financial guy, and he said, "Hey, let's give it a run," and that's what I did. But
All right. All right.
that's the beginning.
Nice. Nice. All right. Now, so IT background, engineering, design. Do you use any of that today? Do you take some of those skills with you today into real estate?
The numbers, the spreadsheets, those kind of things are about as far as it goes. No, I'm not adept at IT like I used to be. I have to count on my son and other young folk to get me through some of the stuff today. But, it's about getting it done either way.
Yep. Now, it's funny you mentioned the numbers. So I've been talking to the viewers in a couple of shows about the numbers, how the math isn't that hard when it comes to real estate. What do you think about the math when it comes to the numbers?
No, it's not. But you need to follow some standards, and there are numerous ways to do that. And one good way to do it is there's several standard spreadsheets that allow you to calculate returns on investments and those kind of things that are pretty standard. If you stick with those, you'll do pretty good. Now, at some point in time, you have to understand what the numbers actually mean,
Right.
so you can interpret them. But that allows you, stick with those kind of platforms, allow you to compare one investment versus another pretty easily.
All right.
That's what I do. That's what I use a lot of those platforms for. I can look at a property, an offer memorandum, and kind of tell you what it looks like, but putting it in the sheet makes it formal, in a way.
Okay.
Yeah.
One of the next few shows is going to be on analyzing, so that's looking forward to that. All right. One thing you mentioned, 401k. So you decided to take 401k dollars, and I'm asking because this is something I've been contemplating myself a little bit. Take 401k dollars. You had the opportunity because did you say you were leaving a company?
Yeah, I'd retired essentially.
Right. Okay.
But I was still fairly young, so I couldn't. You can take the money out of the 401k platform and buy an investment without claiming the income.
Okay.
Right.
Okay.
You can do that now, but you can't take the money and put it into your pocket and then go buy
Right.
the real. Right?
Okay.
Yeah.
So that's something I've been thinking about doing myself. So we might have to talk about that because I've been thinking about maybe some opportunities to buy in the midst of a pandemic. There may be some opportunities. So I've been thinking about doing the same thing myself. But okay. All right. That sounds good. All right. So you are a commercial agent or broker. So tell us what that is.
Okay.
We
Well,
all
the
know.
commercial.
Go ahead.
Yeah, the broker is actually the entity or the company that is allowed to go out and do commercial or residential real estate transactions by representing it by our seller or a landlord or a tenant. The formal title is actually agent. We're
Okay.
called brokers, but we're actually commercial real estate agents. The
Okay.
broker is the entity of the company or there's one principal in the organization that's identified as the broker.
Okay.
So we're actually agents. But just to back up one quick second, I actually bought my commercial real estate before I knew anything about commercial real estate. After I bought made the investments, I became interested in commercial real estate as a career. So that was kind of, so maybe, I don't know if I was backwards or not, but you don't have to be a commercial real estate agent or broker to invest in real estate, obviously. But the interest that drove my interest in commercial real estate. So I was looking to do some other things, and that kind of shoehorned it for me in a way. But it's a big, broad field. I've never done residential, so I can't speak on that part. but it's a broad field. It includes brokerage, i.e. transactions. It includes appraisal. It includes management. It includes finance. Again, there's a lot of different ways to get involved in the commercial real estate industry.
Okay. So
Yeah.
what made you think about, so you said your financial advisor said, okay, we'll give it a try. We'll kick the tires a little bit with the
Yeah.
moving the dollars into real estate. Why real estate?
Well, again, part of it was because of the guys I knew at the gym. I've been working on these guys. Several of those guys are in commercial real estate, and they told me we talked about the advantages of investing in real estate. I was doing pretty good in the equity market.
Okay.
And the equity market is high, fast, and dynamic, and you can make trades in one day and sell and walk over the profit the next day. Real estate's not quite like that. I mean, it's a more involved process. But we talked about the advantages of commercial real estate, and one is the ability to leverage your monies. I mean, so for example, you can buy $1 million property for $100,000.
Right.
So you need $100,000, and that's where you get your increased income from those type of investments.
Right.
Okay? The
Right.
fact that you can leverage the income versus leverage the capital, you can't do that in the equity market. If you own an asset that's worth $1 million, you got to have $1 million into the market.
Yep. Leverage is just so powerful. I talk about sometimes how powerful real estate can be, and leverage is definitely powerful. You're right. If you need when DeVon says equities, part of what he's talking about is some of the publicly available stocks and mutual
Stock
funds
market.
and such. Yeah, stock market. And yeah, if you want to buy a stock that's going to cost you $1,000 or $10,000 or $50,000 or $100, you need to have all that to make the transaction. Hardly would you ever be able to get a loan or leverage to do something like that. And even if you could, it's risky because I talk a lot about how with the stock market, a lot of things are out of your control. In fact, it's all out of your control.
Yeah.
You don't really control any of it once you hit the
Exactly.
order button. But there's some good data. We talked about numbers with real estate. There's some good numbers you can look at in terms of how a company's doing and their balance sheet and things like that, and maybe some news about what they got coming up and what they're doing. But yeah, leverage is very powerful. Okay, so some people were at the gym. They've been talking about it. You were doing well in the equities market, but this was just something, an alternative.
Yeah. And it started out as an alternative, yes.
Okay. All right.
Now, just so you know, I mean, there even in the commercial real estate market, there's several ways to invest.
Okay.
And I took one of the most conservative approaches. I took a performing property was performing, and I bought a single tenant net lease property.
What's that?
That's a single tenant means it's a building that's occupied by one tenant.
Okay.
And national, of course, you want a national credit tenant in that building. In my case, it was a dollar store.
Okay.
These Starbucks and these Walgreens and these Burger Kings, those are national tenants. Okay. So single tenant, occupies the property. Net, it actually says net lease, but that's also for national tenants. And you want that because when you start buying those kind of properties, particularly with, because you can't control that real estate once it happens, by the way. You don't have a lot of control. It's a very conservative investment. Your return is kind of pre-calculated, but it's guaranteed, pretty much. Again, because it's a corporate, nationally guaranteed lease. That gets your value in the property. Again, very conservative, and that's what I did initially. At the time, my wife was not very comfortable with springing too far out, and so this was a good way to get started in that regard. Very conservative, core kind of investment.
Okay.
Hands off, totally hands off.
Nice. So you mean to tell me that most people relate in any type of real estate investing, usually individuals relate that to a landlord, and you have to plunge toilets and you got to change light bulbs and you're getting all these calls at all times of the night. But you mean to tell me that you decided to do real estate anyhow, and that you didn't just have a house or a single family home, you or a person was calling you or a family, you DeVon, just yourself and your wife had a property that a store was in, such as a dollar store.
Yeah, yeah, that's exactly what it is. Yeah, yeah, and again, because of the way the lease is set up, they don't even know who you are.
Okay.
Essentially, I mean, you're an entity that
Right.
happens to own the property. They don't know who you are. You don't go in and meet the store manager, or the store manager doesn't even understand the lease because it's handled at the corporate level.
Above the store.
Yeah.
Right. Okay. I hope the listeners are listening to see the show is called It's Attainable Real Estate Investing
Yeah.
Show. And that's just, an example of how one person or a couple decided to take the dollars that they had been having for retirement and essentially continue to have that money for retirement because the real estate, it doesn't go anywhere, right? I mean, the tenant is
Right.
there. They continue to pay just like your job would pay, a return or pay into your 401k, and you would contribute you took that money, and now you just switch sides. You've got someone else still contributing to your retirement or your cash flow or your income each month or quarter or year.
Right. Exactly.
That's amazing. That's amazing. All right. So, and it's pretty hands off. So you're not getting a lot of calls because the stores kind of take care of
Well,
themselves.
it's hands off in a lot of ways. Even if you own a property where you have a manager, somebody's got to put their hands on most properties.
Right.
Again, with single tenant net lease properties, there's not a lot to do. Even if you own a shopping center, let's say, the one thing you have to do in that case is allocate the cost of operating the property across the multiple tenants.
Okay.
So there's some bookkeeping being done. You may not be in there cleaning the toilets because, depending on the lease, again, the tenants do that for themselves. I'm not talking multifamily now, but that's a different scenario. But if you're looking at industrial office properties, single retail properties in general, they maintain their own space.
Okay.
You maintain the property, they maintain their space.
Okay. I think me and you were talking one time. We talked about how like a Starbucks, they, in terms of a design and the space or any type of maintaining of the space, they really don't want. They got that under control. They really don't want you.
Yeah. For those single tenant properties, they do everything, external and internal. They manage the property and the space.
Nice. Yeah, I can imagine they had those under control. And you go in most stores, and they all look similar to the other ones. If it's a chain, all the Family Dollars look like the Family Dollar across town. They may flip the store from left to right, but for the most part, yeah, you're right. They have their design and their maintaining of the inside all under control.
Right.
All right. So you continue to invest in single tenant net lease today?
I'm actually looking at doing some things differently. I mean, I own 3 stores now, and I'm looking at a 4th. They've been good. I mean, I'm getting some good returns. I mean, it's conservative. And at one point, I did make one mistake, and that is that my financial advisor was an equity guy, stock market guy.
Okay.
And we were just trying this thing kind of a bit, but you need to have someone that understands how to set up your entities to take advantage of the returns you're getting, and also to leverage the tax advantages you get by owning real estate too.
Okay.
So at first I did not do that. So I was taking the income in as an individual, as opposed to having an entity do that. I mean, I had an entity, but it was a single individual entity. So so I did not set it up initially the way it should have been set up. But with that being said, yeah, these are very conservative investments. I mean, when you buy them, you're looking at 7-8% return when they're new. Over time, I'm probably getting 15-16% overall. But again, in 2 cases, I've refinanced the property for the 3rd time.
Nice. So when you say refinance, what does that mean? Tell the listeners and tell us what that means.
Well, unlike a house, when you buy a house, you get a 20-year, 30-year mortgage, and your loan is amortized over those 30 years, so you can pay for 30 years to own the property. In commercial real estate, when you finance a commercial property, generally it's going to be 5, 7, 10 years. And what they do is at the end of that time frame, even though it's an amortized loan, you have a balloon payment. Okay. and you can refinance the property or pay it off if you want to. Obviously, commercial real estate, owning the real estate 100% is not where you get the leverage from. So you do want to refinance it. But with a lot of single tenant net lease properties as well, depending on how long the lease is, a lot of lenders will make the term of the loan coterminous with the lease.
Okay.
So if you got a 10-year lease, you can continue your loan in a lot of cases.
Okay.
So so it's just a matter of just moving the pot, signing some new paperwork and keeping it going.
Okay. Got it. All right. So I would say what's been good about it, like I think about with all investments, but I think you kind of explained that it's pretty conservative, so that's good. It's not a lot of volatility like there is with the equities market. Equity market, it usually is. I guess a lot of time it's good, but it seems like when I look at the numbers every 9 or 10 years, this year maybe it was 12 years, this time 12 years, it seems to go up, and then a nosedive. So the equities market now has taken a dive of, probably 28%. I think when I looked at my own,
it's been pretty interesting. Now,
investments.
But the commercial real estate market does the same thing. It goes in cycles too.
Okay.
It's just that it takes longer to realize your gain or loss.
Right.
In the process, again, because it's not a immediate transaction.
Okay.
But real estate goes through cycles too.
Right. And I would.
But it impacts you with buy and sell time more so than an operational time.
Right. Okay. I see what you mean. And by that you mean that the tenant, as long as the tenant is still okay during such a maybe bad economic time, they're still able to be there and pay their continue to pay their lease. Yeah.
In the case of the single tenant net lease tenants, during bad times, you're still going to get paid.
Right.
At a strip center with several local tenants that couldn't operate, obviously now, you may not get rent. You may have to, I'm working with some landlords now, and we have to kind of extend the lease or give their tenants some free rent so they can still survive. And then, and when they begin operating again, then they'll pick up the leases and their rent payments.
Okay.
So you have to make concessions in those circumstances. But those investments overall make more money than a single tenant lease investment overall.
Got it.
Properly managed.
Right.
But again, that's hands-on.
Right.
That's more gray hair. See. So, right.
Yep. All right, I got you. But so this is May. We're 2020. For anyone that listens to this in the future, we're talking about kind of in the middle of COVID-19. So if you were to have to sell that property now, then that's where, or if you were to buy or sell, like you said, the transactional part of it, that's where sometimes those things can be the economic parts of the world can kind of catch up to real estate too, especially during that time. If you're forced to have to sell at a certain time, kind of like with, I think in 2008, 2009, those time people that were doing a lot of flipping or rehabbing and reselling it kind of in the short term could have been kind of caught with a handful of properties that, all of a sudden unable to get rid of. But long term, which is ideally the same thing with equities, long term, ideally you weather those storms as long as you're not looking to sell the stock in that time, then ideally you're okay.
Mm-hmm.
Okay. All right. So what other challenges, you mentioned the entities may do something different this time. What other challenges have you had with the investment so far?
Again, it's hands off. So there are no day-to-day challenges. But you look at the returns that are happening. I see this all the time because I'm doing investment deals, and I see some of the returns that some of my clients make. I'm going, gosh, what am I doing? I'm not making any money here. But so you look at that and you think about maybe some different ways to do to invest.
Okay.
We can get better returns. It's more risk.
Right. Yeah, that's right.
So you gotta be able to decide whether you want more risk, or lower returns. I mean, it's kind of, high risk equals higher returns.
Right. Which is what we're dealing with now. If you had a lot of your investments in the
Mm-hmm.
equities or stock market and stocks, probably in anything besides cash, but especially in some of the stocks that were really kind of going
Well,
up.
even cash now, because you're not getting any interest. You're not making any money on interest in
That's
cash.
right. That's right. That's right.
Yeah.
Yeah. So yeah, what DeVon means is when as the Fed cuts the Fed rate, that lowers the interest rates on the savings accounts too. So you
Right.
just if you were getting anything in your savings account at all, it's probably down to nothing or pretty well, or it will be soon.
Will be soon. Right.
All
Yeah. So,
right.
so I'm looking for some higher returns,
Okay. All
and
right.
I can do that. And I can do that now because I've got a strong base, and so the risk is not as much as it would have been, 10 15 years ago. Let's say.
Okay. What are you thinking about? What type of investments?
Well, I just don't feel multifamily. I don't like the month to month volatility in multifamily. I know that sounds kind of strange because at least I don't like the year to year volatility in multifamily.
There you go.
Yeah. And as you think about what's going on in the market today, industrial, because retail is going to be, and retail and clients are going to be serviced a lot differently now with more local distribution points than before.
Okay. Right.
I'm thinking industrial,
Okay. All right. That sounds
medium
good.
size, small distribution centers that service in the suburbs or neighborhoods, so to speak.
Okay.
Yeah.
All right. No, that makes sense. I'm sure industrial clients can still pay the bills or kind of got to build up equity to do capital to do so in such bad economic times. But it's just something that comes along every now and then, and there's
Hmm.
a lot of money to be made in between.
Yeah. Exactly.
All right.
Mhm.
Uh, all right. So what would you? So a lot of people they just don't get started. What would you say? And COVID-19 is probably another reason for people to say, "Oh, I don't want to get started. I'll wait till this is over." But if it's not this, it'll be something else. So, why do you think people never get started?
Um, the unlike the stock market, commercial real estate investment is a long process. It's not immediate satisfaction, you know. And if you're looking for immediate gratification, then no, you're not going to see it in commercial real estate. I mean, even if you're buying and flipping commercial properties, it's a 6-month process minimally, but you're probably looking at a couple of years for most flips of commercial properties because you got to add value to it before you can get your value out of it. So you're probably looking at that aspect of it. So, and two, it does require some capital, some significant capital to get started. I mean, you can't take $1,000 and go out and buy a shopping center, and go out and buy an apartment complex. But you can with other people. But I'm saying as an individual investor, you can't do that. So you got to build up your capital, your equity by way of savings or by partnerships or whatever. And that's the part of it. Once you do that, once you get one property, 2 properties, it becomes very easy to get that equity because you got it already in the investments that you have on the table. So, but yeah, so number one, it's not exciting and fast, and number two, you gotta come to the table with some significant equity to get started in commercial real estate.
Okay. Now you said something there. You said add value. What do you mean by that?
Well, if you're going to buy something and it's not a single tenant, at least property like I have right now, you can generally do something to a property to increase the value of it as you own it, during the time frame of ownership. For example, in the multifamily complex, add wireless networks, put in a gate, add parking.
Okay.
In terms of strip centers, re-tenant the strip center with national tenants rather than just local tenants.
Okay.
Increase the rents.
Okay.
But you're increasing the income from the property. Is what we're talking about doing. And there's several ways to do that. Again, unless you got a single tenant that's probably with a 20-year lease, you know what you're getting for the next 20 years. So.
Now you said it takes some time to kind of start with it's not instant gratification for sure. It's
Right,
probably not even an instant purchase, unless you do need to do some due diligence. Like we started at the beginning talking about numbers and being able to,
right.
put together a spreadsheet or something. Just kind of be able to, not to let spreadsheet scare people, but you need to be able to analyze the numbers in a consistent way,
Yes.
and go forward. So, how do you, being a commercial real estate agent under a brokerage, how do you help? How do you help an investor get going? Whether they're just starting, whether they're a pro, how do you help them?
Well, the first thing is you gotta define your objectives. You gotta understand your risk reward profile, and you gotta understand what you bring to the table, be it money or talent. And so that's what you gotta do first before you do anything at all. You know, do I want how much return do I want on my money? Don't want 8, 10, 12, 20, 50. You know, over what time frame? That's very important because that determines what kind of investment you want to be looking at anyway. And again, at the same time, you're talking about your tolerance for risk. Can I afford to invest this? Maybe not get any income in the property, particularly if it's a rebuild or rehab situation. Wait 3 years to start getting income from a property, or not. For example, I'm working with somebody now that's buying a 40 unit in Detroit, empty, total rehab job. It's going to cost them X dollars to buy the property and rehab it. Okay, but once they do that, instantaneously the property goes up. The value, their return goes up 50%. It becomes
Wow.
worth twice as much they put into it once they rehab and purchase and rehab the property. And then
Wow.
once it gets rented up after that, it goes up another 25%. So it depends on what your objectives are. Okay, and once you understand that, then we can figure out a path to get you there. But you gotta have that. You gotta have those objectives defined, and then once they define, you gotta follow the path because again, once you start buying these, you can't change your mind overnight. Over the weekend. Oh, let's do this instead. Well, too bad. They just bought this property and you're sitting on top of it. You're gonna, now you got to rehab it. Now you got to re-tenant the property. Now you got to
Right.
add value so you can get your returns. The objectives is key, and again, understanding what you can bring to the table, and building a team. You need. As I mentioned earlier that I bought I was a pretty bright guy. I had a pretty good financial guy on my side, though he was an equity guy. I missed some opportunities tax wise because I bought the properties the wrong way. I could have actually saved some money with taxes, but by not talking to the right financial guy. So that's important. That's important to do that as well. You got to have an attorney. I mean, you start getting into these deals. These contracts can be 40 pages long. In terms of how you get a deal negotiated, you got to do that. You got to have an appraiser. You go to the bank's going to say, hey, he's not going to say, hey, I think this property is worth $200,000 or $2 million. He's not going to take your word for it. You
Right.
got to have an appraisal, and that shows how much the property's worth. You got to have some appraisal that you can work with. Construction people. If you buy a property that needs some work, guess what? That's how you add value.
Right.
You got to have that work done to the property. So, having the objectives, understanding where you are, where you want to go, having a team, a broker, that understands the market and understands how to buy the market and negotiate on your behalf. Yeah, all that's key.
All right. All right. So for everyone listening, we need our agents, we need our brokers, and Devon is one of them, a good one. I like listening to him because he doesn't have really a one track mind. You can ask him a question and it's just like he answered here. There's a lot of different options. That's not just one way; it's multiple ways, and that's kind of what attracted me to want to have a conversation with Devon and have him on the show here. So like you said, Devon, when I asked why do people not get started, like you said, it's a long process. It's not instant gratification, and that's the kind of world we kind of live in now. A lot of people want immediate, return, an immediate return, immediate cash, immediate gratification, like you said, instant gratification, like you said. How would you encourage, for those that can get beyond that, how would you encourage them to get started? For those that can put aside the instant gratification, how would you encourage them to get started?
Look at the market. Look at listings. Number one. I mean, obviously, by the way, the best deals are the off-market deals. Just just so you know, they're hard to find, hard to figure out, but those are the best deals. But just look at listings. Look what people are listing properties for. If you can get the detail behind the offering, and sometimes it's called an offering memorandum. That'll give you detail on the income and the expenses of the property. Do the numbers on a yellow pad or on a spreadsheet. Kind of get a feel for what it takes to buy it and what the income's going to be over 1, 2, 3, 4, 5, 6, 7 years for that particular property, and kind of feel it. You gotta, it's numbers, but you gotta kind of gotta feel it and appreciate it and even love it a little bit. That's how you get there. But again, once you understand I go back to objectives, because you gotta have a goal. You gotta have a goal in mind. You gotta have an end game in mind. And in real estate, even though it's long term, you don't buy it based on keeping it for infinitum. I've kept properties probably longer than I should have. You look at a 10-year rate of return for that property. 7, 8, 10-year rate of return is how you look at the property. You expect to sell it after 10 years. One part of the equity market, stock market, is something called real estate investment trust. They invest in real estate. These are the institutions that invest in real estate, and they sell the shares in the institutions to us. But they have a formula, as we should have, for buying and selling properties. When they buy a property, they can tell you when they buy it, when they're going to sell it, based upon a time frame or based upon a return they get from that property. Okay? That's exactly how they do it.
So we need to have the same thing with our analyzing and our spreadsheets. Need to have the exact same thing.
And again, it's not always just numbers. Then you got to feel it. Just feel a little bit too. And again, talk to people that are investors. Talk to brokers.
Yeah.
And they talk about, you want a story. It's a story that goes behind every property. You want to understand that story and make your own stories going forward.
Yeah. When I think of feel it, I think that like you have to kind of. I know you can invest, from out of state, but I think of feeling. I think of looking at it, just kind of getting you want to make decisions based on data, but then you do want to be able to see it and touch it, kind of visualize it in your mind. And I always keep in mind that after I do acquire it, like you talk about managers, you still got to be involved some. Nobody really cares about the investment or your property, the way you will,
Right.
It's yours, and you can hire managers, you can hire all these people, but at the end of the day, you still kind of need to keep your eye on the ball, kind of oversee the manager, because people don't always care much about your investment, as you will. All right.
Well, but you'll get monthly, again on the property, you'll get monthly statements, and you can see what the income expenses are. Are they tracking to what they ought to be? And again, you do that at the beginning when you buy the property. I expect to pay, X dollars per square foot, X dollars per unit, to operate this property. Yeah, that's easy to do. That number just falls out of the sky. There's a lot of ways to get that number.
All right.
Mm-hmm.
All right. So, DeVon, how can people get in contact with you? They want to get started. How can they get in contact with you?
Well, the best way is to reach me is an email. Okay, that way I don't lose track of it.
All right.
I can get back to them. The email address is DeVon, DEVON, at PACommercial.com. PaulAndersonCommercial.com. By the way, PA doesn't stand for Paul Anderson, but stands for Principal Associates, but PACommercial.com. You can also call my office, 248-663-0508, and I promise I'll get back to you just as soon as I can.
All right. I'll put that in the show notes too, so the listeners and watchers can see how to reach you, and I know they will. So I appreciate the time, DeVon. I know everybody else will too, and this was right on time. Like I said, we just finished up with a series on buy and hold real estate investing, and just starting to talk about a little bit more about multifamily, but finished a series about just buy and hold in general and how that works, and some of the things you mentioned I think will resonate with the listeners on hearing some of those terms and definitions just in the last couple of weeks. So thanks for the time, and we'll be in touch.
It's my pleasure. My pleasure. Again, there's a lot more to it, and so it takes a lot more than a 30-minute session to figure out what's going on in this industry. But
Absolutely, absolutely.
I'm glad to share any information I have with anyone. So,
All right. Thank you.
thank you.
All right, that was DeVon Jackson from PA Commercial Capital. I really hope you enjoyed that discussion, that interview. I know I did. I enjoy in general just having discussions or talking about strategy or talking about real estate investing in general, whether it's an investor I'm talking to or agent or whatever part they might play in the real estate investing industry. I enjoy having those discussions. Now, one thing I want to point out is that DeVon Jackson does both. You may not have picked that up, but he is an agent and a investor. And for those who are just getting started or just getting on your way with investing, you may not see what that means or understand why that's important. But for those who have been doing this for some time, you know what I'm talking about, in that it is helpful for a real estate agent to also be an investor. And in fact, if they're not, or if they're not familiar with investors and how things work, they may not understand your strategy as an investor, and they may not understand your plan. So it is really nice that DeVon is not just nice, but it's really beneficial if you're working with DeVon or another agent who is also an investor or understands how investing works. It will be more than its weight in gold. That will be very helpful. So I hope you enjoyed the show. As I always say, share this show with someone else. If it was helpful to you, I'm sure it will be helpful to somebody else. I don't share this knowledge, don't put together the show just for you. It's for you to share it with someone else and for us all to be better together. As always, I can be reached at neelyrealty.com/engage. That's NILEE realty.com/engage.
You have been listening to the It's Attainable Real Estate Investing Show, sharing transparent knowledge on investing and the powerful impact real estate investing can have on your wealth and lifestyle. Follow or subscribe to the show using your favorite podcast app so you'll know firsthand when a new show is released, or visit neelyrealty.com/podcast and see the show there. That's NILEE realty.com/podcast.